Over the last year, the crypto market has undoubtedly left many projects in undesirable financial positions. Although the last few months have been accompanied by some sort of respite, not all could boast about significant revenue and a budding ecosystem irrespective of the torrid market conditions. But such was not the case with MakerDAO. As a project developing technology for savings and borrowing while housing a stablecoin on the Ethereum blockchain, Maker has shown why its bullish precedents set earlier may not be industrial beasts slowing down anytime soon. One reason MakerDAO has been able to experience growth and maintain such high standards is DAI, its decentralized stablecoin. In August, MakerDAO announced that it had increased the DAI savings rate to 8%. So it was not surprising when the total value locked of savings DAI surpassed $1 billion. For context, savings DAI is the yield-bearing version of a decentralized stablecoin. System allows DAI holders to lock their assets and earn yields on them over time. And at press time, DSR's TVL further increased to 1.64 by forgiveness about, this implies that the 5% annual percentage yield offered by the protocol was enough to get more DAI holders into the system. Other roles DAI has played in Maker's growth include its utility acting as a low remittance coin, gas payments for Ethereum, and its stability in volatile markets. Furthermore, the last 30 days have brought in a total of $10.7 million in revenue for Maker. This data was, according to Token Terminal, when checked on an annual basis, the protocol's revenue is over $137 million. This made MakerDAO the 7th largest revenue generation protocol at press time. Primarily, Maker does not generate its revenue through gas like Ethereum. Instead, the interest paid by borrowers on the platform helps its revenue, and consider that increase suggests that there has been a lot of borrowing activity on the protocol lately in total expert strat. According to DeFi Llama, the growth experienced has also helped Maker's treasury. At the time of writing, MakerDAO's treasury was $171.61 million. According to this number, while DAI's share in this was 29.62%. As a result of MakerDAO's impressive network, NPR has also been able to put a good performance while a lot of altcoins are dealing with downsides for a one-year performance. NPR could brag about its 71.21% increase in the last 365 days. And while there may be many reasons for the hike, MKR's relevance in the market could be linked to its fundamental tokenomics. For the uninformed, the MKR token has two main purposes. One is for governance, and the other is acting as a recapitalization resource. As a governance token, MKR allows literally anyone to submit a proposal for a vote. However, not everyone is allowed to vote on changes to the protocol. Its function as a recapitalization resource is found in the fact that the token supply could expand through a debt auction. However, this would only be required if the system debt exceeds the surplus. Meanwhile, MakerDAO's network growth has decreased, according to data from Santiment. Network growth, based on the Tenral on-chain analytic platform's definition, is the number of new addresses interacting with a network. And by interaction, an increase in the network growth would mean a surge in transfer by this new cohort. On the other hand, a decrease suggests a decline in Maker's address transactions. Therefore, Maker's network growth implies that there has been a reduction in traction on the network on the last 30 days. MKR circulation within the same period has also decreased. But unlike network growth, a decrease in this metric could be a positive signal. The circulation of a cryptocurrency measures what the number of tokens used during a certain period of time. Usually, high circulation often coincides with short-term selling pressure. Conversely, low circulation means possible stability and a potential for the asset price to increase. This was also evident in KR's 24.49%. Increased to $1,452 in the last 30 days. Furthermore, it is not a new development that MakerDAO has established itself as an authority in the collateralized debt position category. However, it still faces competition from emergent projects in Libra Finance and Liquidity. Besides that, other DeFi protocols, including Curve Finance and Aave, have joined the decentralized stablecoin market. So Maker might need to keep its eyes open, as these projects could be hell-bent on grabbing some of the market share DAI has. But, irrespective of the brewing rivalry, there's still some catalysts that could put Maker on the bullish end. For instance, the introduction of the sub-DAOs after its endgame finalization is that you could put it in the spotlight again. And as they said, we even watched the world, and we've been called up. Also, the narrative around the deployment of real-world assets on the protocol could prove to be beneficial to Maker. And, over the last year, collateral type of legal entities have grown in DeFi. For many market participants, projects that take this development seriously have the tendency to enjoy the fruits of a full-blown bull market.